Well, I'm here with David Pratt, who is the president and CEO of Ranch Management Consultants. And they run the Ranching for Profit schools, which have been around for a long time and really help ranchers understand ranching as a business. And just gave a presentation here to the Academy of Veterinary Consultants, helping the veterinarians better understand some of the challenges, but also the opportunities for their clients in the ranching business. And I wonder if you could first tell us a little bit about the Ranching Profit schools, and then some of the key points from your presentation today.
Sure. The Ranching for Profit school is a business school for people in ranching. It's based on the notion that knowing how to raise livestock is not the same thing as knowing how to run a business that raises livestock. We also do a follow-up to the school called Executive Link. And that's based on two notions. One, it's always easier to see how to run the neighbor's ranch. It's easier to solve the neighbor's problem. And the second notion, we like to say that when you're self-employed, you work for a lunatic. And the reason that's true is not because you're not smart or you don't work hard. You're plenty smart and you work plenty hard. The problem is nobody holds us accountable to do the things that need to be done. So these boards give you an objective view inside your business, telling you what they see, and they hold you accountable to do the things that need to be done. You've got to start with economics. I mean, if it's not profitable, you don't care where the capital is going to come from because you can't afford to do it. So we start with economics. And when it comes to economics, there's only three things any business can do to increase profit, whether it's these vets and their practices or whether it's a ranch or this hotel. You can improve the margin per unit. That's the efficiency of production. You can reduce the overhead costs. That's your infrastructure and your labor costs, land and labor costs. Or you can increase turnover. That's the number of units in an enterprise, but it also involves making sure you've got the right enterprises.
You talked about some pretty good results from some of the participants in Ranching for Profit, and especially the Executive Link, where they have continuous follow-up and feedback from the other ranchers who can serve as their board of directors. Or if you just talk to some of those results and how their averages compare to the averages overall in ranching.
The results are phenomenal. The data I gave were from people that have been in the Executive Link for 3 years or more. Restructuring a business is not an event, it's a process, and that process takes time. The Executive Link groups meet 3 times a year. The first year is essentially to stop the bleeding, to stabilize the business. The next year is to chart the course for the future, and the third year is to make sure we're on the right course and make sure the implementation is going well. The benchmarks for profitability, well, I can't tell you how many people I've heard tell me ranching for profit is an oxymoron. Don't tell that to an Executive Link member. But the industry average is, if you look at the return on assets in ranching, it's negative. It's negative 1.5% if you don't count the appreciation on the land. And we don't. We're looking at the profitability of the operating business, which means the operating business has to rent the land, whether you own it or whether I own it or somebody else. All right, the cattle are going to pay market rate rent. Our benchmarking also includes the full cost of labor. In other words, you're not going to work for free anymore, or you're going to get paid what it would cost to replace the work you do. Everyone's going to get paid. Whether you actually make it a cash wage or not, the books are going to reflect it. So given all that as part of the profit calculation, the average ranch in North America loses money. It's negative 1.5% ROA. The average business in Executive Link is over a 4% return on assets, and the benchmark in Executive Link, that's based on the top 20%, that's a 9% return on assets. And none of that counts the appreciating value of the land.